CEO of Nedbank, Mike Brown, joins me now to unpack the numbers further. Mike, thanks for talking to us this evening. So your profits up 26% in the reporting period, with a strong showing of revenue as well as what was behind it chiefly, would you say? Are you saving costs or winning more of the market share?
Thank you, and good evening to your listeners. We were certainly very pleased to report 26% growth in earnings and an 81% increase in the dividend in what is still a difficult economic environment. And multiple factors, I think, drove that. Firstly, we have seen improved transactional activity in our client base compared to the first 6 months of last year when, there were still varying stages of lockdown underway. We've also seen increase to profits as a result of the increase in interest rates, which benefits us through our own capital or endowment, and that hasn't yet translated into higher levels of bad debts, which have remained relatively flat period on period. And then finally, we saw strong growth from our businesses outside of South Africa, albeit off a low base, in particular ETI or EcoBank, which lifted associate income, over 70%.
Now, you made some interesting remarks today about your work from home or hybrid strategy that you've had to implement with the advent of COVID-19. Of course, you now have the opportunity to be more economical with your office space. You're already starting to see the fruits of that. What is your vision then for the many branches that Nedbank currently has?
Yeah, so there are a number of different factors at play here. If I just start with branches to your question, what we've seen at Nedbank is we've invested heavily in our digital offerings to clients. We've seen very strong growth in anything to do with digital. And that trend was accelerated by COVID. And as more and more customers choose to engage with us on the app or via the web, we've now got over 1.7 million customers actively engaging with us on the app. We have less and less need for the same amount of physical footprint or branches. And those branches that we do have, people are coming in there much more for sales and servicing than the, let's call it, more mundane requests that are now much easier done on their apps. So we would see a continuation in both a shrinkage in our square meterage as well as what happens in branches. And then in offices, we've embraced the hybrid concept. And, over time, we think we'll have somewhere between 50 and 60% of our staff working in offices, 30-40% of our staff in some form of remote working arrangement, coming into the office sometimes and not other times. Clearly, what is still important is to engage physically with people for the culture of our organization and in particular for innovation. But there's certain things that can be done just as efficiently working from home.
On to this one now, Mike. How is Nedbank viewing the consumer at the moment? I mean, you say that there's been a bigger appetite or greater appetite in mortgage and home loans from South African consumers. Does that tell us that the health of the consumer is improving despite the challenging times?
Well, certainly we have seen in the first 6 months of this year the consumer remaining resilient. Actually, what we've seen over the last few years is if you look at sort of big picture things like household debt to income, that has come down over the last 5 or 6 years. Household debt servicing as a percentage of personal disposable income is probably at a 10 or 15-year low right now. And during COVID, in particular, households in the middle and upper end built up savings. So where we are seeing the pressure right now is primarily in the entry-level or lower LSM environments where, unfortunately, the impact of inflation, not really interest rates, the impact of inflation on food and fuel is disproportionately large.
Other concerns, Mike, is the cloud that hangs over the economy right now. Are you worried about the extent that Eskom has had an impact on the economy? Are you also engaging government and other related stakeholders and other CEOs who are trying to find a way to deal with South Africa's energy crisis?
Yeah, so I think we've said for many years that energy right now is a binding constraint to investment, economic growth, and therefore job creation in our country. And we certainly welcomed the energy action plan that was released by the president last month. it would have been wonderful to have had that action plan years ago. But now that we've got it, what's absolutely key is implementation. And over many years, South Africa has been very good at planning and less good at implementation. And we really need, an improvement in the operating performance of Eskom. And here, Andre de Ruyter certainly has the most difficult job of any CEO in South Africa. But we also need more electricity connected to the grid, because without that, we will continue to have varying levels of load shedding for the foreseeable future. So we certainly remain actively engaged through other CEOs with government in doing everything that we can to remove that binding constraint to economic growth and job creation.
Mike, as always, thank you very much for joining us this evening. That is the Chief Executive of Nedbank, Mike Brown, breaking down the numbers that they released today. And of course, as you've just heard there, the importance of energy security in South Africa's economic growth. And here's a look at how your markets ended off the day.